What's up, my fellow Harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into another week of harmonic technical analysis. We're going to break down the key market patterns and what we can expect from the upcoming economic data releases. So this upcoming week, we're going to focus on a few crucial reports that could shape the market's direction, including durable good orders, GDP, initial jobless claims, PCE, personal income, and spending, as well as the much-awaited NVDA earnings. But first, let's quickly touch on what each of these reports means. First up, we have the durable goods orders. This gives us insight into consumer and business spending on big-ticket items. Think items like machinery, vehicles, and electronics. So a rise here can signal confidence in the economy. Next week, we do also have GDP, which is a gross domestic product. This measures the overall economic activity and growth. It's one of the broadest indicators of economic health. We also have initial jobless claims. This tracks the number of people filing for unemployment benefits for the first time. It's a key indicator of labor market strength, and in my opinion, it's going to be one of the most important things to look at moving forward here for the market to see if the unemployment rate is rising or not, because that is what the Fed is now looking at moving forward as inflation does come down. So also this week we have another important data here that releases is PCE. That is the personal consumption expenditures. It's the Fed's preferred inflation measure. It tells us how much consumers are spending and how prices are changing. We also have personal income and spending. That data shows us how much money people are making and what they're spending it in. It offers insights into consumer behavior. And lastly, one of the most important things to look at for this week is NVDA earnings. So it's going to be very important to see how they report. So if you like and also find value in this type of content, don't forget to smash that like button, drop a comment below, and subscribe to stay updated with future videos. Before we get into those charts, I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. So having said that, let's dive into those charts. Alright guys, first up we have the SPY. We are still currently within this bullish black swan on the daily, so what can we expect harmonically to the upside for the next target off of this swan pattern is to hit PT3 around 599.08. Obviously just call it 600 flat. That's for the next target harmonically. You have targets to the downside if you find some resistance here at these levels. As I bring up my drawings and the oscillators, you can see here that on Thursday we had quite the volume come into the downside where we did generate an HSI arrow, where the HSI did hit the overbought conditions here, which could signal that a potential downtrend is incoming, or at least a pullback. So what can we expect to the downside if the HSI is going to go towards that midline? The next level to the downside you want to lose, if there is going to be continuation to the downside, is to lose 560. Below that you have the 90 EMA of 554, and losing the 90 EMA, there is a shot where you could come test PT2, which is at 54.19, and that would also fill the gap there around 544.96. That would also test the 50 EMA, which is where you kind of actually started to pick up some of the volume there and break above the 50. So it's only natural you come back for a pullback to that test that 50 EMA, maybe create a higher low, and then ultimately find support there off the midline, and then continue pushing for a higher high. To the upside, there is a level that you need to break above, and that is around 562.48. You had a bit of resistance there on Thursday as well as on Friday, and you had a bit of resistance back in mid to early July there, where you did finally break and when you created that new all-time high. So to the upside, you need to break 562.48, then retest the all-time highs at 565, and then you can see more upside for the SPY. If we go over to the weekly here real quick, you can see that we also, as I bring out my HPC indicator turned on here, we've managed to close above HOP there at 555.17 is what HOP was at, and we closed at 562.13. Volume did decrease slightly here, but the HSI did signal an HSI arrow here last week, 2 weeks ago, where it was potentially saying, hey, we are coming back here to the upside for more of a longer term time frame, right? So we're looking here at the next level, like I said, to test the all-time highs at 565, and above that you're a new price discovery, and we'll have to see where the resistance may come in yet. So you can draw next level here to the upside here for the SPY if it breaks above 565 from the current swing all-time highs to the lows here that we got in the market. That would be calling around 565.16 at the 100% retracement, and then the 1.272, which would be calling there at 580. So that's what you can expect here to the upside if volume continues. I know this is not a perfect setup here in terms of the volume increasing, but this looks like potential 3 white soldiers. So that is a continuation pattern to the upside, meaning a potential move to the upside could still be coming within the next week. So definitely have to keep a close eye to see if SPY has more room to the upside. Obviously, with data and earnings beat from NVIDIA could potentially send it off to new all-time highs for the SPY. So definitely keep a close eye on the SPY. Jumping over to the triple Q. So the triple Q, same pattern as SPY. We are currently in a bullish black swan pattern on the daily. We have a harmonic target of PT3 to complete this type 1 reaction all the way to 553. On Friday, we did close at 480, and you close on an indecision candle after Thursday's close. You did generate an HSI arrow to the downside. The oscillator is indicating that we might be getting a potential pullback here. So what are those levels to the downside for the triple Qs? If you manage to not hold support above PT2, the next level you'd be looking to lose is PT2 at 472.93. Below that, you would come back down to test the 50 EMA, which is roughly around 468 and change, and then you would fill the gap there around 465.11. So it would be natural to come back down to retest, let the oscillators cool down a bit here, retest the breakout of the 50. As you could tell here on August the 14th, you had a bit of resistance there where you hit the 50 EMA, closed below it, and then you gapped up. So if you come back down there, you would create a higher low, and then if you're obviously not able to hold that level, you have more room to the downside here. PT1, which is around 454.04, where there is another small gap to fill there at the high there at 454.37. Below that, then I have a target at 450.72, and then you would come back down to test the 200 EMA. If data is bearish, NVIDIA is bearish, you can come back down to those oversold conditions right where the 200 EMA, and even further to the upside. If you do have a bit of a pullback, you consolidate into the anticipation of NVIDIA earnings and the data releases that are going to come out this week. You could come back down for a pullback, like I said, to create that, to fill that gap, maybe even lose a 50, find support, get back above 472.93, ultimately test the highs of Thursday, which is around 485.54. And if you manage to get volume to pick up here, the next level you'd be looking at would be the gap fill there around 482.74 and change, and then obviously to create to test the all-time highs there at 504.16. Above that, then you do have targets there to 553. If you take a fib retracement from the all-time highs to the swing lows, the next level above that all-time high would be the 127% retracement, which is calling at 525.30 before we actually go to PT3. So if we go over to the weekly you also had an HSI arrow generated 2 weeks ago, where I told you that the HSI was completely oversold and that a potential move to the upside is incoming. So we could be looking at a V reversal here back to test the all-time highs there on the weekly. You have the ABCD target there at 498.04. Above that, then you can see HOP is at 425, which gives confluence to the daily there, the fib retracement I just drew from swing all-time high to swing low, which is calling 525. So we'll see if there is more upside here on the triple Qs, because the triple Qs on the weekly, you had a bit of decrease in volume, so it's only natural here to see that if we might be in a consolidation phase waiting for the anticipation of those data releases as well as the earnings from NVIDIA. So definitely keep a close eye on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones, in my opinion, looks bullish out of the indices here. So what can we expect here harmonically? We do have a bearish crab pattern on the daily. As you can tell at the completion of the pattern, you came all the way to type 1, tried to go back to XA, ultimately went all the way to target 2 and below, but right now it looks like you're coming for a type 2 return to potentially HOP, right? So if you look at the movement to the upside here, there was significantly buying pressure during the rally here, but you also had some selling pressure, but it was ultimately lower volume. And then on Friday, you had huge amounts of buying pressure come in where you managed to almost test the all-time high. So you went as high as 412.32. The previous all-time high was at 413.86. You managed to close on Friday at 411.83. So what can we expect here to the upside? You did generate an HSI arrow indicating that a potential pullback was incoming, or maybe some downwards action, but ultimately you managed to close on Friday with more buying pressure, higher volume, and almost at a close above the previous all-time highs. So if there's volume continuation up here back to these overbought conditions, you could just curl back up the HSI arrow back to the overbought conditions, where you could see it go all the way up to HOP there at 422.61. I do have a level of resistance here at 412.35. As you can tell, you had 1, 2, 3, and then 4 attempts, and you're not able to close above it. So if you're able to close above 412.35, you're looking at XA at 413.72, and then hop there at 422.61, which would create a new all-time high. I do have a level there around 420.72 as well. One scenario that could also be playing out is if there is some resistance here to the downside, you could come back down to test the 90 EMA around 407, come all the way back down to target 1, which would almost be the retest of the 50. You could even come back to test 400. You fill that gap, and you would create a potential inverse head and shoulders, right? You have the left shoulder right here. This would be the head, and you would come back down to create the right shoulder back to that neckline where it's at 412.35. And if you're able to have volume and data and earnings for NVIDIA is good, then you could potentially see those targets to the upside. In the event that it doesn't, then you have these targets back down to fill that gap around 401 and change, and then back down to target 2 around 393. On the weekly, we also have an ABCD pattern here where you see that you closed above ABCD there at 407.02. You could argue that you had 2 candle closes, so if you had another week here, that would be 3 weeks around that target there at 407, which could mean continuation harmonically to the upside to test that hop target at 422.67, which gives confluence to the daily harmonic target as well, which is around the same target at 422.61, just a few cents difference there. So it is finding support off the HSI midline, so you could consolidate. Obviously, I wouldn't expect any crazy moves to the upside or to the downside in anticipation of GDP, PCE, as well as the NVIDIA earnings. So definitely keep a close eye on the Dow Jones. Jumping over to IWM here. So the Russell 2000, just like the Dow Jones, in my opinion, are bullish. You have huge amounts of volumes coming in here, especially off of Friday. You managed to close at 220.38. So what can we expect here? We do have the bullish black swan in play. It's currently above PT2 there at 216.43. PT3 for IWM is calling 248.36 as a next level. So volume coming in pretty high still. The HSI still not in overbought condition. So the next level to the upside I'd be looking at for IWM would be XA at 224.57. So that is a level of resistance, as you could tell here when the pattern was generated. Even the deep crab was generated because you have two patterns, right? You have a bearish deep crab and a bullish black swan. So the bearish deep crab, you already came down here for the type 1 reaction, and now you could be looking for the type 2 return to hop. And you had that black swan generated, which at the completion of the pattern, you're just going straight up for that potential type 1 reaction, which gives confluence right now. Even though there's one bearish pattern and one bullish pattern, they are both indicating movement to the upside. For the bullish pattern, you're going for the type 1, and for the deep crab, you're going for the type 2 reaction back up to hop. So that's a return to potential hop down the line. So the next level I'd be looking at here for IWM would be 224.57, where you do have resistance. You have 1, 2, 3, 4, almost, you can argue more than 4 or 5 attempts depending on where, but around 224 to 223 is a huge level of resistance. You do have quite a bit of volume, so if you're able to close above that, the next level I would be looking at would be to complete the type 2 return off of the deep crab at 223. Above that, you could consolidate for a few days there, and then maybe look for to complete the bullish black swan pattern at PT3 at 248.36. Volume looks very good for IWM in my opinion. So the next level, if you do come down here for IWM, the next level you'd want to lose would be 216, come back to 213, and there is still a slight gap to fill here. As I bring on my drawings here, just let me draw this real quick here. The next level to the downside, if you lose that 213 target, would be to fill that gap there around 208.75, where there is that PT1 target from the bullish black swan pattern. Right now, to me though, the HSI started to curl up, meaning that it could potentially look for more upside before any downside. If we go over to the weekly, you can see this is much clearer. It is off of decreasing volume. You ultimately want to see the 3 white soldiers off of increasing volume or almost average volume for each candle close. But it is a pattern to look at, because if there is actually a pattern formation of 3 white soldiers, you know by definition that is a continuation. You could see more upside, in which case you would kind of do a reversal to test the previous 52-week highs, which is at 228.63, CD would be off the bearish white swan would be at 228.63, and then OPR at 238.77, which gives more confluence to these targets to the upside. So in my opinion, right now IWM looks very good and for more upside, but we'll see if the data is also on IWM side to potentially give us more upside. So definitely keep a close eye on IWM, because if there is more upside, you could see this thing break out pretty crazy to the upside. So keep a close eye. Jumping over to XLF here, the financial ETF. So if you were paying attention to my previous videos, you would know that the financial sector I was a bit bullish on because the banks looked like they wanted to run, and boy did they run this week. So XLF here did create a new all-time high on Friday at 44.43. So what can we expect here? The volume started to pick up from Thursday to Friday. As you can see, any downwards pressure has been on lower volume, and the buying pressure has been on higher volume. So the HSI is curling up back to the overbought conditions. You did try to generate that HSI arrow on Wednesday with that hanging man, but that ultimately was off of low volume, and you had this invalidation with the increase in volume and now closing above the previous candle close. So you could definitely look for more upside here for XLF. Hop there would be at 44.72, and that's where I think you could have the HSI be overbought again, and then finally maybe hit some resistance above that 44.72. If we take the previous all-time high to the swing lows, you'd be looking at 45.05, giving confluence there to my $44.99 target, and above that you have 46.24. If we jump over to the weekly here, you can see the weekly also has a bit of resistance there at that hop, so it did reach hop at 44.59. It fell a little bit short, right? 44.59 was hop, and the high there was at 44.54. Nonetheless, the HSI on the weekly still clearly has more upside before the overbought conditions are met. The RSI still got more upside to that 70 area, so definitely approaching some levels here where maybe you do hit a bit of resistance and you might consolidate or ultimately come back down. The MACD did flip green on the weekly, so to the downside. Next level to look at, if you do find resistance around hop, you'd be looking at to fill the gap there. There is a slight gap that happened on Thursday into Friday, which would fill the gap around 44.05. You would come test XA at 43.80. Below that, you have another gap to fill. Bring these gaps over here. You have a gap here, which closes around 43.13. Below that, obviously, you have the 50 EMA, just slightly where target 1 at 42.68. But harmonically, right now, the oscillators are indicating more potential movement to the upside before you hit resistance. So, in my opinion, you could be trading up here in that $45 to $43 range into NVDA and the data release this week. So definitely keep a close eye on the banks, because the banks are running, especially you have also JPM approaching all-time highs and a bunch of other banks that are also creating all-time highs. So definitely keep a close eye out on the banks. Jumping over to XLE here, the energy sector ETF currently has this bearish shark pattern where it is struggling to stay above target 1. In my opinion, in order for this to come back for a type 2 return to hop, you want to close above 91.06 and definitely have volume come into the upside. Right now, the volume is relatively low compared to the sell-off, right? It did decrease, but on Thursday into Friday, you had a bit of an increase in volume. You did cross the HSI midline slightly on Friday, so the next level to the upside, you definitely want to close above T1 for more upside. Come back up to test terminal bar 94.51, and then maybe you could see 96.20 and then hop at 97.28. You are also potentially in this downwards channel here where you're having a bit of resistance here for XLE. If you manage to hold the resistance there, the next level you could be looking at would be to retest a 200 SMA, roughly where T2 is at 88.39, and then you could be coming back down to reach this 85 to maybe high 80s. Below that, then you come back down in this channel to test 82.51. If we go over to the weekly here really quick, you can see that this is a long-legged doji candle here off of increasing volume here to the downside. So it's an indecision candle. We don't know if it's going to break above. It's having a hard time resistance around the 921 EMA. So we could be coming down to test that 50 where it is holding support. Below that, then you can see obviously come back down to that 82.51 more long term. The HSI is kind of flatlining, so we'll see what the energy sector is going to do here moving forward. If we go over to crude oil here really quick, you can see here at crude oil also a little bit bearish here. Volume did pick up on the sell-off, right? You do have a potential M formation here, which is in harmonics. As you know, this M formation is ultimately, if it follows the fib ratios that make up a certain pattern, that is ultimately a bullish harmonic that could be generating where you could look to the upside, but you would need to make a lower leg. So you could also argue that this is also could be a double top, and you know that's a double top definition for that pattern formation is a bearish formation, which you could come back down to maybe XA there around 70. So you did lose the 200 EMA on the weekly for crude oil, and that is a hanging man. So we'll see if there's more continuation, because if there is more continuation to the downside and you have crude oil come down to almost $70 a barrel, you could definitely see the energy sector ETF here come back down to below target 2 at 88.39, maybe come and retest here where it found support at 85.54, and ultimately back down to 82.51, where you could tell it has revisited there and kind of held support. So definitely keep a close eye out on the energy sector. Jumping over to Apple here. So Apple on the daily, currently no harmonic pattern. So what can we expect here? So bring up my drawings. The next level to the upside, you did have HSI arrow trigger on Thursday. Off of Wednesday to Thursday had increase in volume, but Friday you actually had almost matching volume. So still not clear if we want to come back down on Apple yet. So if volume starts to pick up, as the HSI did come back and curl down, it looks like it may be coming for that HSI midline, but off of Friday's close, we still not yet clear. If it does have resistance there, I do have this line here, this trend that comes back all the way since August of 2022 here at the high of that trend line. You can see where it's hitting resistance, where it broke out, failed, ultimately tried to break above there on Thursday and couldn't close above. So you had two attempts here on Wednesday and Thursday. So if there is more upside here, the next level you want to break to the upside would be that high there of 228. There is a gap to fill all the way up to 232.33, and then a retest of the all-time highs at 237.23, and then I have a fib ratio there around 242.22, which will create a new all-time high. If this is resistance, because you had hit 3 times this trend line here, the next level you'd be looking at would be to test the 21 EMA, roughly where my target there at 221.59 is at. Below that, then you come and test the 50 EMA around 216.68. Obviously, losing that level would probably bring the HSI down to below that midline, and then if you reach the oversold conditions, you could see more downwards pressure back down to around 200. One thing to note here is that you could have a bit of resistance. You could create a potential inverse head and shoulders. You have the left shoulder on this side here. This would be the head, and then you would come back down to create the right, find support, and then ultimately look for a higher high. If we look at the weekly here, the weekly HSI is indicating that it wants to come up to test that midline. So that midline, I would assume, would be the break above that trend line, maybe even the gap fill, and then look for more upside. There is no current harmonic here yet on the weekly as well. So Apple could be going into a consolidation period here, where you could start looking to find a good support level. As you can see here, it did trade around this area here, so it could be holding support here until anticipation of the good data and NVDA reporting good earnings as well. If we break to the upside with those bullish numbers, then we could see Apple continue to the upside, because right now, in my opinion, Apple looks pretty strong here, finding support as well. If the data is bearish, then we'd be looking at potential downside, but definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft currently still has this bearish ABCD pattern, where it is struggling, in my opinion, here. Anytime it's trying to break above the 50 EMA, it's met with resistance, and on Thursday, fortunately, met with high volume resistance, and you generated that HSI arrow. And Friday, you had similar volume come in and weren't able to close above the 9 EMA, and you closed with this indecision candle. So the HSI is looking like it wants to test that HSI midline. If you reach that HSI midline, that could be anywhere between to the downside between 409 and 405. Below that, you have target 2 at 399.45, and if you do lose that HSI midline, the oversold conditions for Microsoft could set it back down all the way to maybe test a double bottom there around 385 and change. So to the upside here, if you've managed to find support where that HSI midline is and where that 200 SMA is at, The next level you want to break above is T1 there at 419.80. Break above the 50 EMA there, which is around 425, and then look towards targets to the upside of 50 SMA at 434. And that would give you a clear indication that the type 2 return is incoming to potentially up to hop. But right now, still a bit of resistance for Microsoft. If we look over to the weekly, you can see it met resistance there around the 13.9 and the 21 EMA. It's below it. So volume did decrease. HSI is pushing upwards, indicating maybe it is going to hold maybe some support level here. See if it manages support, because that 200 EMA and SMA is a level of support for Microsoft for the time being. The moment it loses it, then you have a bearish case scenario for Microsoft. So definitely keep a close eye on it. Jumping over to Amazon here. So Amazon currently has this bullish shark pattern on the daily, managing to find support above T1 there. So what can we expect here harmonically for Amazon? You did generate an HSI arrow on Thursday with decent volume, but Friday you did not have follow through as the volume did decrease. So it looks like maybe you're consolidating here around target 1. So to the downside, the next level you'd want to lose to potentially signal that the HSI arrow is coming for that pullback, as the HSI did lose some of these levels here, and it's looking like it wants to retest that midline. So you definitely want to lose 176.41, come back down to fill that gap, because there is a gap there around 172.28. Below that you would test the 200 moving averages, which is between 171 and 170. If you manage to hold support, because that is where you did gap above it, so that is a key level to retest, right? If you retest there and find support, you would create a higher low, and you'd be looking for a higher high after that if it manages to hold support. To the upside, you definitely want to break above the 50. As you could tell, it is struggling there 2 days in a row. You weren't able to close above it, so that 200 so the 50 EMA, excuse me, you definitely want to close above 180. Look at the 50 SMA, they're on the 183. Then you have a target at 188.65, and then finally complete the whole type 1 reaction off of this bullish shark pattern at 195.55 at T2. If we go over to the weekly here, you can see similar to Microsoft here, where it is struggling on the weekly to close above the EMAs here around the 913 and the 21 EMA. So it is holding above the 886 of the pattern. This is a bearish shark pattern. OB is at 175.95. So if you manage to hold support above there, you did generate an HSI arrow last week, indicating upside more long-term was incoming for a potential V reversal. So harmonically here for the weekly, you have targets that are the terminal bar there at 199.77, and then hop the fair for a new all-time high at 203.04. So definitely keep a close eye out on Amazon. Jumping over to Tesla here. So Tesla currently has this bearish decrap on the daily. So what can we expect here harmonically? Tesla did have a bullish breakout here above a target of mine that I have drawn here at 223.79 on Tuesday. It did go as high as 228.22 off of pretty good volume. On Friday you did manage to have increase in volume. So right now I think Tesla, there is potential move to the upside incoming. If you're able to close above 223, then I would be looking at BC of this harmonic pattern there at 235.90, where there is a gap to fill all the way up to 245.63, ultimately reclaiming XA. Then you could see that it's going for a type 2 return to maybe hop there down the line at 275.74. If you do manage to find some resistance here, the next level to the downside I would be looking at would be around 211, 210. Test the 200 moving averages between 205 and 203. Below that you do have target 2 at 189.30. So right now the HSI looks like it wants to come back down. Maybe you do consolidate. Maybe there is an attempt to retest the 200 EMA and SMA, which would find support right roughly around the HSI midline. If you go over to the weekly here really quick, you can see that it's struggling to stay to break above target 1 there at 225.61. You hit a wick there, but ultimately the volume is starting to pick up here. You definitely want to see it on the weekly increase, because it's still relatively low compared to the selling pressure that it got. So right now the HSI is curling up. So if you manage to get the weekly to retest and cross above the HSI midline, that would definitely be around where the 200 SMA on the weekly is at, around 234. You break above that, then it can get a little bit bullish here for that V reversal to complete all the way up to maybe 270 down the line on Tesla. So Tesla is starting to get some volume to the upside, so hopefully we can see more volume come in, because if Tesla breaks out of this, in my opinion, you could see some crazy movements to the upside. So definitely keep a close eye out on Tesla. Jumping over to Google here, guys. So Google on the daily, no current harmonic pattern, but there is one on the larger time frame and in the weekly time frame, and I will go over that in just a bit. But something I wanted to bring your attention for those of you who maybe are following harmonics, there's other different strategies you can use to see where potential support and resistances are here for Google, specifically if there's no harmonic to look at. So I quickly wanted to talk about the impulse and corrective waves, and for those of you who don't know what that is, I do have a group session video in the group session channel where you can definitely look at that video, and it tells you how to chart them and what to look for and make up those certain rules for those impulse waves and those corrective moves. So I'm going to quickly go over that really quick. So if we draw a fib retracement from the all-time highs to where it retraced down here and find a corrective move up here, this would be considered a first impulse wave. That impulse wave started from here to the lows here where it did correct itself. It tried to correct itself, but ultimately managed to find some resistance there. If I bring this a little bit closer here, between that 382 and that 50% retracement, you had that wick, didn't ultimately get that 50% retracement and failed that corrective move, in which case it started a second impulse wave. So the second impulse wave starts where you corrected on the first wave and you found bottom here at this down on the downside here, where you did start to move up here for that corrective move. And as you can tell, that 50% retracement has been resistance. Anytime you create an impulse wave and you do a corrective move, you can see that Google has struggled at that 50% retracement. So it did create a lower low. So the next level you'd be looking here to create that third impulse wave. You start the impulse wave at the correction of the second wave, and ultimately you come here where it did find bottom and it corrected itself. And again, this did try to break above the 618, which could have shifted momentum back bullish here, that hey, the trend is breaking, but ultimately it is finding resistance here between that 50 and the 618. So if Google fails this third impulse wave here, the next level you could find out where that would retrace to create a fourth impulse wave and a lower low is by taking that fib extension from the third corrective wave here back down to where it found bottom and back up to the corrective move here. So the next level, if Google does find resistance here at the 21 EMA and you have volume to pick up to the downside, you could see a lower low that would start a fourth impulse wave anywhere between the 786 to the 100% retracement. So 153 to 149 is where you'd be looking at. And then ultimately, let's assume that this would come back down to 149 at the lowest there for a lower low. Then you would potentially create a new corrective move, which could be anywhere between the 50 and the 618 back up to 159 and 161. So those are the levels that I would be looking at ultimately here for Google. Should you find resistance, you could come back anywhere between the 786 and the 100% retracement between 153 and 149. And that would obviously come back to test the 200 EMA there and 200 SMA were on 155, 159. Below that, then obviously you have targets to the downside. The HSI is coming to the downside here, maybe tested that midline, which could be giving confluence to that 200 SMA, which would create that lower low. If we go over to the weekly, you can see that it is struggling to stay above the 21 EMA. That is an indecision candle with lower volume. The HSI is completely oversold, but no HSI arrow has triggered to the upside. So you could revisit here for a double bottom on the weekly, and that's roughly around 154.83, which would be, I believe, where the 786 would start of that fib extension we just drew. So to the upside, you'll obviously want to break above here for Google, above the 618, break that trend, and you ultimately could start looking for higher highs and higher lows, and ultimately reclaim 170. 170 would definitely switch back bullish, and then 50 EMA would be at 174, and you have a gap to fill, and you could look at targets to the upside. So definitely keep a close eye out on Google. Jumping over to Meta, guys. So Meta currently has this bearish bat pattern on the daily, obviously on its way for a type 2 return to hop, where if you watched my last videos, you know how bullish I was on Meta, and I did say that it looked good to the upside, and on Thursday you actually reached a new high at 544.23. Made a little bit of money there as I did play some options to the upside, but ultimately did not manage to close at a new all-time high. And on Thursday you did close below the Thursday's close at 528 with decrease in volume. So On the HSI, you did cross the midline, and if this is going to the overbought, or excuse me, the oversold conditions, the next level to the downside, I would be looking for Meta would be at 518, where there is a small gap to fill there between 518.02 and 518.15. Below that, you have the 21 EMA at 514 and change, and if it reaches the oversold conditions, that could be where the 50 EMA and SMA are at, around 503 and change. Below that, you obviously have target 1 at 481.48. In my opinion, here into this week, to this upcoming week, you might be range bound trading between 548, where Hop is at, and XA at 518.15, where you're just waiting. We could just be trading between that range, waiting for the data release and NVDA earnings. So if there is bullish news for the market for Meta, you could be looking back to retest the high there around 543, close above Hop at 548, and then maybe make a new all-time high at 567.41. So definitely keep a close eye on Meta. Jumping over to Netflix here, guys. So Netflix had this alt-bat pattern where it completed both a type 1 and a type 2 return, and if you watch my previous videos, knew that I was also bullish on Netflix. Also made a little bit of money on Netflix playing the option chain there for this week, where it did create a new all-time high at $711.33, but ultimately were not able to close above that $700 range, and you did generate an HSI arrow on Friday, so it is off decreasing volume. Obviously this was completely overextended after a crazy rally here where it lasted from the lows there to the high for 11 days in a row, where you just continued pushing to the upside. So what can we expect here harmonically for Netflix? If this HSI arrow is indicating that a potential retracement is coming here, the next level you'd be looking to lose would be the 9 EMA there at 678, then come back to test Hop at 665.19. That's where roughly maybe the HSI could reach that midline, in which case you would want to find support, because if you don't find support, the next level I'd be looking at for Netflix would be 658, the 50 EMA retest at 651, and then you can see these targets to the downside. If you're able to hold above the 9 EMA, the next level you want to close above would be the $700 range there, and maybe test the all-time high there at 711, and you can see a new close for a new all-time high. So if we take a fib retracement here from the most recent swing high to the swing lows, the next level you'd be looking at would be to close above 697.49, and then maybe 727 down the line. So if we go over to the weekly here, the weekly, you did cross the HSI midline here on the weekly off of pretty good average buying pressure here. So you did generate an inverted hammer candle here, so you definitely don't want to go below that target there around 675. Otherwise you could be coming back down to a potential inverse V reaction down to test some of these levels. So you definitely want to see if you can close above the previous all-time high close, which was at 690.65. You managed to close above that, then we can see more targets to the upside around the 700 plus range. So definitely keep a close eye out on Netflix. Jumping over to NVIDIA here, guys. So NVIDIA, no current harmonic on the daily. If you watch a previous video, I've also said that if it looks like NVIDIA was going to come up to test potentially in the 132 range if you were able to close above 120, and that's exactly what it did up here. Got very close to tested 130.75 for the week, where you did generate an HSI arrow, and on Friday you had that inside bar. So what can we expect here? Obviously, in my opinion, I do think you're going to be range bound trading between 132 and 120 in anticipation of the earnings release on Thursday, Wednesday. So in the event that it doesn't consolidate within this range, the next level to the upside would be a break above 132.66 to retest maybe the highs there at 140, and then ultimately make a new all-time high at 144.71. If you do find resistance here and you do lose these levels before earnings, the next level you'd want to lose is the 120.88 target. Below that you have the 50 EMA at 116, and then a gap to fill at 111.07. So I do think you're going to have range bound trading in anticipation not only of the earnings but also into the data. So definitely have to keep a close eye out on NVIDIA. Right now you could also argue, just looking at this pattern formation here, you can see that this is a potential inverse head and shoulders, where you have the left shoulder here, head, and this would be the right shoulder, and the break above the neckline would be around that 130, 132 range. Obviously, if that is a pattern formation that comes to fruition, you're looking for a new all-time high and higher upside here for NVIDIA. In the event that it is a false breakout, then you obviously will come back down to test some levels to the downside. So my opinion, very important to look at NVIDIA this week, because NVIDIA, I think all eyes are NVIDIA. If they report earnings, the market could rally into a new all-time highs for a bunch of tickers, and specifically the ETF. So definitely keep a close eye out on NVIDIA. All right, guys, last but not least, looking at here at Bitcoin. So Bitcoin had a bit of a bullish reaction on Friday, where you managed to have high volume into a break above the 200 SMA. So depending on what broker you're using, I'm using Binance for this chart here. It did go almost as high as 65K, and into Saturday you did decrease on the volume. So that is off of a retest to test the 200 SMA to see if it was a false breakout, but ultimately it was on decrease in volume. You will want to see follow through now for Bitcoin to the upside to see if that actually was a breakout or it could be a false breakout. The HSI right now on the daily is a bit in the overbought condition. Doesn't mean it can't continue pushing higher, but right now it could be getting exhausted at these levels. If we go and jump over to the 2-day, because we do have a bearish harmonic pattern here, the dragon pattern, where you can see it came down to test the 1.272 of the pattern at 52K, but it did have support there, and it's looking like right now it wants to break above the 50 SMA. If you're looking at previous retests or breakout above the 50 SMA, you can see that every time it tests the 50, it goes towards that 69 to 70K range, but ultimately fails and comes back down. So right now, you did break slightly above the 50 SMA and are finding support above it. So the next level to the upside for Bitcoin I'm looking at would be a retest of 69 to 70K. If you're able to break above that and volume still comes in, then you can see these targets to the upside at the BC target at the 886 of the pattern at 71.8K, and then OPR for a new all-time high at 78.4K. The HSI is almost in the overbought conditions, so that overbought condition zone could be towards that 69 to 70K. If we go and jump over to the weekly, you can see that it finally reclaimed some of these EMAs, specifically the 9 and 21 and the 13. So to the upside, you are potentially going to test that midline, and that could be that resistance again around that 69.90K, where you have been creating wicks up here on the weekly and ultimately are not able to close above. So Bitcoin, in my opinion, here at a key level. So definitely keep a close eye on the crypto market to see if there is finally going to be a breakout here, specifically if these ETFs for Ethereum are also going to come through for some of these hedge funds. So definitely keep a close eye out on Bitcoin. All right, guys, so that's it for me. We'll be streaming same time as always. So for those of you who are interested in watching me stream, I do stream from market open to market close, Monday through Friday. Unfortunately, this week I will not be streaming on Thursday and Friday, but if you want to catch me streaming live, I do stream over on Twitch. So link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your weekend, and I will see you guys bright and early on Monday. So take care, everybody, and peace.